Welcome to SmithWeekly Discussions, an occasional program for our members of SmithWeekly Research. Please note this program is a private discussion and everything contained herein is for entertainment and educational purposes only. With that, we hope you're in a comfortable position, along with your favorite beverage, to enjoy the discussion. We remind our audience to examine our show notes attached to each of our shows to better understand how our program functions. Before we get into our discussion today, we want to say thanks for questions coming from our audience of SmithWeekly, including Ryan S., Mark R., Jackie A., and Paul M. On the program today is a new guest introducing a new company to us. Mr. Sam Lee is on the program. Sam is the president and CEO of NorthIsle Copper and Gold. The company is focused on the North Island Copper Gold project, which is located in northern Vancouver Island, British Columbia. The project is in its preliminary economic assessment stage with additional exploration work ongoing. NorthIsle is listed on the Toronto Venture Exchange under the symbol NCX, as well as on the US OTC markets under the symbol NTCPF. Mr. Lee, it's a pleasure to have you on the program. Welcome.
Hi, Andrew, and thanks for having me on. I do have my favorite beverage in hand and ready to go.
Excellent, Sam. Well, certainly I hope it's a good one and definitely need some warm coffee these morning hours. Need some water as well because I think we're going to get into some good discussion here. So it's good to have you
Indeed.
on the program. Introduce to our audience NorthIsle. Well, first, as you are a new guest, we typically always like to ask, tell us a little bit about your background and experience in the junior natural resource sector.
Sure. So I've been in the natural resource sector in Canada for about 30 years now. I'm an engineer by training. My thesis at the University of Toronto actually focused on copper, gold porphyries. Hydrometallurgy is my specialty, so leaching minerals from ore. But I spent circa 2000 to 2020 at an investment bank, CIBC World Markets. Predominantly, I ran a number of functions there, including the Latin American, Canadian initiative, the Australian ASX, TSX cross-border initiative, and then most recently, I was the group head in their Vancouver office. I've been around for quite some time around the industry. I've got a really good grasp of commodities and projects that really do resonate across many points in the cycle. And I got involved with NorthIsle Copper and Gold. My chairman, he's a mining Hall of Famer, Dale Corman, who's sold multiple projects, making him and his shareholders billions of dollars, probably most notably Penasquito to Glamis Gold Corp back in 2006 under the brand Western Silver. He had been a client of mine at CIBC for many, many years and had asked me to run this company in 2020. So I've been the president and CEO since October 2020, where we have had a really good run. It hasn't all been up, but certainly from that point in time, we're in over 10x from when I started.
Sam, thank you for that, and brings me right into my next question here for you, just as far as how you look at the market today for juniors, as far as conditions and sentiment out there, specifically in the gold and copper segment, which is where this company's focused. Just your thoughts there generally on the market, and then, what you think really drives success for these junior companies during a time when sentiment and market conditions are more or less sour.
Look, I mean, as I said, multiple cycles I've been through, not only on this side of the business, but on the banking side of the business, and every cycle has very different thematics, right? So I've worked on over and advised on over $100 billion of mergers and acquisitions and equity fundraisings during that period of time, to 20 years at CIBC, and it was distinctly driven from this first super cycle starting in 2000, going up to 2010. And that was driven by the Chinese urbanization efforts and effectively electrification efforts. They were clearly bringing everybody outside the cities into the cities, and they had to build the infrastructure, which created a massive GDP growth of probably over 11, 12% during that very robust time. And it was a super cycle lasting 10 years on the upwards side of it. And the demand for copper was insatiable. It was better. and really was driven by that Chinese demand. So, from 2011 to 2020, we saw the down side of that super cycle. And that's when that demand abated a bit. China GDP growth during that period went from about 11% down to about 5%. And the rest of the world wasn't growing, at least from a GDP perspective, as quickly as what we saw during the last super cycle. So that really put a lot of these, especially copper projects, which typically tend to be much higher capital intensive projects, in peril, because for any company, especially a junior company, if you're looking at multiple billions of dollars of capital to be spent on a project, it becomes very untenable to be successful, especially in a downward trending market where not only access to capital is limited, but also the permitting periods are elongated. So that's what really happened during that period, circa 2010 to 2020. And then, of course, what happened past that is, during this period, but really didn't come into fruition until around 2020, was this concept of the rest of the world starting to electrify because of its decarbonization initiatives. There was obviously a lot of talk in and around that time, focused in and around the climate treaty, being concerned that we would have to stay within a 1.5 degree range of global climate change increases. And in order to do that, we would need to effectively spend $1.2 trillion in raw material exploration development to get to those climate change objectives. And of course, copper being the most important critical metal that enables the electrification process. Of that 1.2 trillion, $750 billion needed to come from copper projects. And there aren't that many copper projects today in the world that have been identified. And then, of course, the ones that have been identified, there's a various range of risks associated to permitting, funding, etc., that, again, limits the ability for them to produce. So then, in the last 5 years, really what we've come down to is how do you get these copper projects, firstly, discovered, and secondly, moving into production as quickly as possible, understanding that all these risks exist, funding, permitting, social license, etc. And so that's kind of where we're at right now in the market. It's a situation where even if every single project in the world that is known today gets developed, we're not going to have enough copper supply to the demand over the next 20, 30 years. And so therefore, there isn't a single, at least not one that I know of, a market participant or corporate that doesn't believe in the medium to long-term copper strategy. But the problem is that conviction on copper doesn't exist as strongly today as it does in the medium to long term. And so that's why we're seeing a very sort of tight margin between what our long-term analyst consensus forecasts are suggesting and where current spot copper prices are today. Because long-term, people believe in the proposition, but short-term, it's going to take some time to actually turn that into conviction today. So on the other end of the spectrum, which is relevant to us, is gold. So gold is not a critical commodity. It's a critical currency. It holds great value because, as we see today, it is a store of value. It is a currency that the market tends to flock towards in times of uncertainty, which is clearly what we're seeing today in the market. And so it almost acts as a natural hedge to copper, which is more of an economic indicator. And we're seeing that today. We're seeing gold, I think today, hit all-time high prices of over $3,000 per ounce. And again, this is the conviction today on gold because of some of the uncertainties in the world today. It makes it a today trade. So this is extremely relevant to NorthIsle Copper and Gold because we have a big copper project, which can be very capital intensive. But because we have an incredible amount of gold. It's about 7 million ounces of gold. We have been able to identify through a preliminary economic assessment that we released a few days ago that suggests that our project is one of the largest and the highest return projects and lowest capital intensive projects, copper and gold projects on the planet. So this condition that we're in today really is one that is affecting us very positively, because I can't think of another project that has the same material leverage to copper and gold with such a low capital intensive initial spend.
Sam, thank you for that. Lots of stuff to discuss there, and appreciate your take on the market. And just back to your background, both the technical side of things as well as the capital markets banking side of things, both very important in this sector. And certainly the dynamics around some of the sentiment, and of course, the longer term outlook, both copper and gold, gold playing more of a role right now as far as price goes. We're starting to see some of the juniors turnover based on company specific news, success at the company level, but then also people are starting to maybe come down the food chain a little bit in the business there. And then the other factor too is just the broad market out there always plays a role in our junior market as well. And so obviously that's at a different point in time as well with the credit cycle and all the other stuff that you have to weigh there with the broad market. The climate stuff, we'll leave that for a separate discussion maybe when you come back, but lots of stuff we could keep talking about on that, but I want to keep on track and get right into the company here. And one of the things I want to have you start off here with is just give us a quick overview of NorthIsle. We just talked a little bit about it, but just talk a little bit more as to why you took on the post at the company, leaving your good job there at CIBC, and then just a little bit of history on the company obtaining and working the project.
Sure. So the reason why I switched over, and you're right, running, as you could imagine, an investment banking practice for one of the largest Canadian bank-owned dealers is a important and lucrative job. But I do think that, as everyone could appreciate, to fill your time with the most purposeful activities is how we should all endeavor to target our opportunities when we look at what's available. And so for me, there's really nothing more important than contributing to our community. So our project is located in British Columbia, which is where I live. I literally can take a flight from Vancouver South Terminal to our project area and be on site within about an hour, which, during the COVID period was very important. Accessibility was very important. And currently what we're seeing in the world right now, this localization effort around tariffs and being a little bit more insular. I actually fundamentally think that's an important thematic. I do think that we should be looking inwards first and building our communities first. Again, I'm not suggesting tariffs are the way to do it, but I do think that fundamentally, in order to be stronger, bigger, better as a country and as a planet, we do have to look at inwards, and we do have to build our local communities first, which is exactly what we're doing at NorthIsle Copper Gold. That was the purpose-driven reason why I wanted to switch over from banking to NorthIsle. The second reason is just, as I said, I've worked on over $100 billion of M&A over the 20 years of being a banker, and I know which assets are absolutely going to resonate and are important. We should all, as entrepreneurs, ask ourselves, what problem are we trying to solve in this world? This is absolutely a problem, whether it's climate change, whether it's AI, which requires 10 times more energy than a regular Google search, for example. These are problems that we need to solve in this world. And I think that it is incumbent on us to try to be best positioned to solve those problems, which I do think this asset does in part. In terms of the asset itself, I think what drew me to the asset was that there is over 60 of data and work. The Canadian government started effectively running geophysics and on this property back in the 60s. There was a mine that was generated from that activity called the Island Copper Mine that's just adjacent to our property that was developed and in production by Utah BHP for 24 years. Again, copper, gold, very similar geology, very similar production profile as what we're talking about. So all of the sunk costs around infrastructure, roads, power, ports, town, all of that was built by the provincial federal government and Utah BHP. So this idea of repurposing all of this infrastructure, like you could literally just drive into our project. You look down, you see paved roads. You look up, you see power lines. You go 20 kilometers away, you've got the closest deep sea water port from continental America to Japan, which is where this product is sold. Like all of that has been now spent, and to be able to repurpose it for a very similar size project is not only the right thing to do, it makes an abundance of economic sense. So that's, I think the project history and the reason that I was attracted to the opportunity.
Very interesting. The location's a great location here. You have a history of mining on the island there. You have operations that are ongoing there now, which we'll get into and have you talk a little bit about. And then, of course, you have the access. The access is great from an infrastructure standpoint, not to mention the nearby port as well. So I appreciate why you selected this. Certainly, location is pretty dang good here. Just on the capital structure, want to talk about that briefly, and then we'll get into people here in a moment, Sam. But the company completed a financing, closed a few months ago, back in December. Just talk a little bit about cap structure in terms of cash on hand now and how far you see that carries the company into 2025, and then also current shares outstanding, and then, of course, major shareholders on the roster, including yourself, board, and management.
Sure. Maybe I'll kind of reverse the order of those questions, because if you talk about our major shareholders, that is what is going to drive our strategy around issuing capital, right? Because effectively, uh, five people own about 45% of this company, and then 20% of that is our management and insiders. So our chairman, Dale Corman, again, Mining Hall of Famer, he owns over 10%. I own about 7.5 million shares. This is all paid capital. I just early exercised my options last June, a year and a half early, paying an unrealized capital gain without selling a single share. That's the level of conviction that we have in the company, and that's supported by a tremendous group of individuals, including Donald K. Johnson, who some of you may or may not know, but really is one of the titans in the Canadian banking industry. Very close to Warren Buffett, is a vice chairman at BMO, effectively is one of Buffett's bankers to BMO. Michael Gentile, who is a very well-respected portfolio manager, runs a $500 million fund, Bastion, who has been one of our strongest supporters from day one since I joined in 2020. And we have continued to cultivate and build a very strong institutional group through every equity offering. So if you could, if you think about that capital structure, we are always focused on limiting the dilution at every single level for the maximum amount of resource. Just to ballpark it, it's about, if we issue $1, we kind of expect $2 to $3 of returns in a reasonably short period of time, unrealized returns, of course. That's a good sort of beacon to set out a capital allocation strategy, right? So over the last 4 5 years, we've been very disciplined. We've never raised more than 10% of our market cap, so between $7 to $10 million at every equity raise. And if people go back in the last 5 years and look at our stock chart, you'll see that we are effectively over a 10x. So every time we raise, we're raising at a significantly higher level. So we do sort of uh, adhere to that 2 to 3 times, right? So, and of course, if you raise at a higher price, you limit the dilution, which is exceedingly important to our shareholders, of which management owns about 20% of. So that's kind of our philosophy, the way we do things. We don't issue warrants. We're completely clean on the balance sheet as it relates to debt or warrants. As you mentioned, we raised about $10 million. So we have about 12 million as per last quarter, reported quarter. It was essentially subscribed by two multi-billion dollar institutions. One was out of the US, Franklin Templeton, and one was in Toronto. So every single offering we do, we tend to introduce one or two of these major institutions that can see the progress we make at every single time. I believe Franklin Templeton is well over a 2.5, 3x since they initially invested in us about a year and a half ago. So the capital structure, as I said, is very clean. We've got approximately 250 million shares outstanding and zero warrants. We tend to, from a management compensation perspective, the first year I did not take any salary. I took it all in options, which again, I've early exercised a year and a half early. That's the fundamental structure of our pay structure and management team. We take more pay at risk because we are a junior company and we want more alignment with our shareholders. So the pay at risk is options, RSUs, DSUs, and a smaller cash component. So our directors currently, for example, do not get paid a stipend. I think we're one of the only companies in our size bracket right now that doesn't pay a cash stipend to our directors. They all get paid in options and DSUs for their work, right? These are very successful people who, don't need a cash stipend. They want that alignment, upside alignment with shareholders, and they've done very, very well alongside our shareholders. That's essentially the overview and philosophy of how we raise money. Now that we're close to a $200 million market cap company, we can actually start to really expand our use of proceeds and capital allocation beyond exploration. Exploration is a wonderful tool because we've got a 35-kilometer district. We can kind of pick and choose what we want to go after, right? So our exploration program this year, for example, is focusing on what we've now defined as a much higher margin, 65 to 70% margin area that has been now defined in the PEA. That's what we want to expand. And if we can expand that is going to have a hugely material impact on our project economically. Exploration will continue on as per usual. And again, as I said, every program we've done since we've joined has really provided that bump, that success, that exploration success. We are in really fertile porphyry territory, 35-kilometer district, starting at that Island Copper BHP mine. But now I think with this announcement of the PEA and these numbers, which are second to none on almost every metric, we can also have this ability to develop the project as quickly as possible.
Definitely some notes to be taken on the cap structure here and how you guys have put in basically a good set of best practices to do what you've been able to do so far with this capital structure. I think maybe some other folks out there in the junior sector should take some notes. Appreciate that. Very good information here on how you guys have set this up. I want to get into the project specifically of the PEA more in just a minute, but talk a little bit more about some of the key personnel that are assisting you at the site and what they are bringing to the table to advance the North Island project.
Sure. So let's start from the very top. I think I've talked about my chairman, Dale Corbin, over 70 years in the industry. He is really a titan as it relates to mining and certainly copper and gold. And so he's put this all together. He remains extremely active. Think of him as as kind of the Warren Buffett of mining, who really is quite sharp and can see opportunity better than most in our industry. And that's what you need as a non-executive chairman, someone that actually can provide that strategic oversight. Our board is then really constructed in a way that speaks to all competencies. So Kevin O'Kane, over 35 years at BHP, he actually was the chief mining officer for BHP at this Island Copper mine that sits adjacent to us. So he was living in Port Hardy. Two of his sons, I believe, were born in Port Hardy. while he was running this Island copper mine that sits just about 20 kilometers away from where we are. So he has a very good institutional knowledge of the area, of the opportunities, the risks that exists, and he has chosen to come back and to help us develop this project as quickly as possible. Another interesting fact was, after that mine shut down, it was him and his team that was moved over to Escondido, which obviously is one of the world's largest, if not the largest copper mine, to build that mine, and then Spence and others as well. So this was the A team at BHP at the time, and we are very lucky to have him as part of that counsel and guidance and ability to move this project forward in exactly the region that he worked in over about 20 years ago. So, and then, I think Martino Di Ciccio has been on the board since 2017. So Martino is the president and CEO of Montage Gold. It's a billion-dollar gold company. It's part of the Lundin Group. Martino is also on a number of Lundin boards as well. So his experience, he is, past Endeavour Mining. He's spent over 20 years in the industry. Probably one of the most brilliant communications IR corporate strategists that I've had the pleasure of dealing with in the industry, and certainly his success at Montage Gold in a very short period of time certainly rivals NorthIsle's performance over the last couple of years. So very lucky to have him as well. And then we have got Kina, who is our audit chair. The important connection there, again, is in the north end of the island. She is also the chair for the joint venture for another big mining project adjacent, or at least neighboring ours, called the Orca Quarry, which has a number of First Nation groups that are similar to ours and that overlap our project as well. So a very strong board that has a huge institutional knowledge of our region, of our area, of knowing how to get big projects done. And then that, of course, then cascades down to our group, which includes Nick Van Dyke, our CFO. Again, was an executive for a company called Polaris that owned that large Orca quarry just to the southeast of us, which the company led by him sold to a company called US Concrete for about $300 million back in 2017, I believe. And then we have the person responsible for our PEA, Ian Chang, who is IPO'd a company called Pretium Resources that owned the Brucejack property in northern BC that just got bought by Newcrest, Newmont. Well, he was employee number 5 and effectively developed and de-risked that project to construction FID, and helped permit that project in record time. About 18 months it took them to permit that project, which is probably by far the fastest period of time I've seen a project in BC sanctioned. And then we have a very strong geological team led by Robin Tolbert, who is over 40 years of porphyry experience. We're looking to build that team very soon, and you will see that come out over the next couple of days as well. So all in all, this is a very strong team that has executed flawlessly over the last 5 years. Of course, there are twists and turns to every story, and we are not immune to that. But the overall trend has suggested that every time we set a goal, and every year we set a goal, we usually achieve or exceed that goal, which is being reflected in the market today.
Lots of angles of experience here, and then of course always best to under promise and over deliver, as you guys have certainly done here looking at the equity so far. Lots of connections that some of which I know a little bit about as well, so always good to refresh on those things. Let's talk the preliminary economic assessment for just a moment here, and then we'll get into some further details. This was released to the market during February. Just cover off for you what you saw as the key findings from the study, Sam, and then we'll just talk a little bit more details in a moment.
As part of my job as an investment banker, it's really about assessing fair value opportunities. And when you look at really any project, any mining project, you want to focus on four things. One is it material? Is it something that is meaningful to, anybody, not only investors, but the world? And that's usually, a size question. Is it big enough, right? The second is if it's big, then usually it's quite capital intensive. And so, is it realistic to imagine that you're going to be developing this project or someone's going to be developing this project based on the capital intensity? The third metric is, of course, return, which is just an economic number that is a reasonably easily measurable number and something that you can compare, as a standalone number at times. And then the fourth is, what is the ability to pay back the initial capital, right? And so those four quadrants are the metrics that we measure our project when we say that this is among the largest, highest return, lowest capital projects on the planet. So to put numbers to that, it's about, this is all at long-term analyst consensus pricing. So over 40 analysts for long-term pricing, not today's spot. It's about a $2 billion after-tax net present value. So that's a big project in any regard. Lots of people will say, well, there's a lot of $2 billion projects, but they're probably going to be very difficult to develop because of capital intensity. Or our capital intensity on an NPV, after-tax NPV to CapEx ratio is 1.7. So that's an extraordinary number. So it's essentially a $2 billion NPV to effectively a $1.1 billion Canadian CapEx, or 850 million US CapEx. So for people that know CapEx is 850 US is actually among the lower end of a range for most projects, let alone copper projects. So then you say to yourself, okay, well, that's actually very attractive, but what is the return, right? Like, what is the return and the payback? Well, our return after tax internal rate of return is 29%. So I can tell you for a copper project that's 30 years, which is effectively what our project is, 29-year life of mine. That's a huge project. And usually huge projects yield, copper projects yield IRRs between 10 to 20% after tax. If you get to 20%, you are very, very, very lucky, right? We have 29% defined in our PEA, again, at long-term analyst consensus pricing. And then that obviously drives the fact that we can pay back that $850 million initial CapEx in 1.9 years. So the average for most projects in and around $2 billion payback is about 4 to 5 years. So if we could pay back our initial capital in 1.9 years and then use the remaining capital to fund our phase two, that is a huge, huge advantage. All in all, these numbers are extraordinary because you usually, if ever, see a point of intersection of all four metrics being, among the leaders in the comp universe, which is what we're seeing today.
Yeah, this is good information. I appreciate you going through this with us here. And then for a copper gold porphyry, certainly, you look at some of the CapExes. I would just say for the audience, just take some time and look at development projects. You don't have to go very far. BC would be suitable, and you take a look there. This definitely comes in quite interesting and should be very much on the radar. So I appreciate you going through that and talking some of those metrics, and the gold very important here, the copper very important on this project as well. They really complement each other as to a development strategy as well. So appreciate the highlights on that PEA. With respect to some of the work that you guys want to accomplish this year in 2025, Sam, post the PEA coming out here, just as far as continued exploration work, I know this is a big focus for the company over at Goodspeed, that target area, then of course Red Dog, testing new exploration targets, maybe the commencement of pre-feasibility early works there to start down the pathway of potential pre-feasibility study as the next step in the economic analysis process. Just talk a little bit about the goals this year on those fronts.
So to expand a little bit more, and this speaks to our strategy and goals for 2025, If you look at our phase one, which is that really low capital intensive high project, it's a gold project. So we would be producing about 200,000 ounces of gold and about 50 million pounds of copper. So that's about a 30% gold to copper distribution, right? And so if you were to sensitize this project economics to today's spot price, right? Using NPV 5% spot price of gold, which is actually at the time we ran the analysis, it was $2,900. This is a $4.9 billion after tax NPV. $4.9 billion from $2 billion, right? So this is the beautiful part of having effectively your phase one being a gold project and your phase two being a copper and gold project. So it's about 50-50 copper and gold in phase two. It's about it's about 30-70 copper gold in phase one. So 70% gold, 30% copper in phase one. And you see the massive leverage it has. It's a 45% IRR after tax at spot prices today. So that to us says, wow, we should be looking at this phase one area because that is where you get the tremendous bump in economics because of these higher margins, extremely levered to gold prices, which again is you can't find another copper project that has the same leverage to gold prices. I don't think in our case. And by the way, just if for your listeners, we have actually comped this against every developable copper project on the planet. We don't just limit it to Canada or BC. So if you go onto our website, take a look at our presentation. We don't identify any specific ones because we don't want to call anybody out, but we segment them as projects that have greater than $2 billion around projects that have less than $2 billion NPVs. And you'll see within those four quadrants significantly outperform the average on every single metrics. So then that leads us to saying, okay, yes, let's de-risk this. And usually when you go down the phase of de-risking pre-feasibility, feasibility study projects, typically if they stand, idle around the resources, they typically get less economically attractive because when you de-risk, you're usually making less and less assumptions, which typically contracts economics. Which is why when people say, look at a 20% IRR at a PEA level, they usually discount it significantly and say that thing is going to be 15, 10% by the time it's done. So us having a 29% PEA under status quo conditions, even if you knock off 5 or 10%, that's still an excellent project during the de-risking period. But the key to our project is that we have now identified explicitly through this PEA this northern corridor that informs the phase one high return area. And that's where all of our budget for this year, that the money we raise in December, is going to be focused on. It's going to be focused on Northwest Expo, which we've now see hosts high grade 2+ grams per ton portions in the pit shell at surface. So we're looking for that causative intrusion, where that's going, where it's been displaced, and we find that causative intrusion. That is going to be a game changer for phase one, 100%. And the second portion of our exploration program is West Goodspeed, which currently is not in the resources because we just made that discovery last year. And since making that discovery, we've drilled 16 holes, and this is effectively only a couple of 100 meters away from that northern corridor resource, that higher margin resource that we have included in the PEA. And so the objective there clearly is to include it into our resource, assuming that this is, continuation of this trend. Then the expectation, and so far it's been supported by the grades that we see, is that the value per ton rock, the NSR value per ton rock, the revenue that we get from this rock is similar, if not better than average, than in this northern corridor, which again is going to be hugely additive if we're able to get that into a resource, which I think we're 70% of the way through already. We're spending approximately a third of our budget this year to define that internal resource this year. And then finally, it's to expand the current strike length of West Goodspeed to really connect the dots around this northern corridor trend. If right now the trend, just to give people an idea, it's about 7 kilometers a trend. It's not a strike, so that encapsulates the three projects: Northwest Expo, West Goodspeed, and Red Dog. If there is an ability to convert that 7 kilometer trend into a 7 kilometer strike, which means that this is coming from potentially one source, that is the game changer for this company and for the northern end of the region. So that's what we're spending our exploration dollars on this year, and we will continue to advance the exploration program with a focus on increasing those margins, increasing the grades, expanding the life of that phase one, that really higher margin phase one area, which means that as we de-risk this project through pre-feasibility and feasibility, the objective really is to make the project actually stronger through good exploration in the higher margin zones to counteract, what the de-risking process traditionally is, which is obviously creating a lower margin of error and potentially decreasing the economic value of the project. So that's our strategy, and we're blessed we can advance this strategy because of the fact that we have a 35-kilometer porphyry district, and we do have multiple levers as to what we want to focus our exploration dollars on. The third part of the exploration story, or of the district story, is Pemberton Hills. And so the analog I would make here is that, again, this is something that I'm, I'd say probably closer to than most. Large companies like a BHP, for example, at this point in cycle, they don't look at single asset projects. They look at district projects. And the action around consolidating the Vicuña district with the acquisition of Filo for about $3.5 billion, and then Jose Maria for about the same amount. So this was almost close to a $7 to $10 billion acquisition, was because of a district play. It wasn't because of any individual play. But those two projects, Jose Maria and Filo, were part of the logic of open pit for the first 30 years, which is Jose Maria, that goes into an underground that could be generational. Right now, which would be Filo, right now it's undefined. They don't even have a resource, but they're hitting 1% grades at depth along tremendous intervals. And BHP has already helped spend over $200 million of drilling activity there. So we have a 35-kilometer district, and what we've just defined in the PEA is that 30-year starter pit relative to the largest companies in the world would observe. What we don't have yet is that generational discovery in, say, Filo that would potentially add 50, 100 years of mine life to that region. But we do have a very good head start in Pemberton Hills. So this is an area that we have done extensive work to triangulate on a drill program that would be significant from a cost perspective, and that would most likely yield, if we yield a discovery, it would most likely be a buried porphyry, so underground, which in all respects would require a major to help develop. So our strategy around Pemberton Hills is, even though it's only about 7 kilometers away and it's almost equidistant between our defined project and the BHP's Island Copper project, it's about 7 kilometers equal distant. The strategy there really is to develop our first 30 years and then to get a partner to help us discover the next 100 years. Because I think if you were to look at the overall strategy, everyone would understand that if we maintain the 100% interest in the first 30 years and we make a discovery for that generational opportunity, even if we had to sell down that position in that discovery, that would open up the entire district, and that would be, I guess, congruent to our mission, vision, and values, which is to advance this district as quickly as possible. So stay tuned. That is part of the 2025 strategy as well. And I think that there's a lot of ways you can introduce that partner to help us open up the entire district.
Good to talk district plays here and some of the comparables, as well as it sounds like the 2025 activities into 2026 will obviously start to support when you guys want to get on with a pre-feasibility study, which, based on what we're hearing here and based on the work yet to come, it sounds like that's going to be changing. That pre-feasibility study is going to look quite a bit different than a PEA will at this point. So looking forward to seeing the success come out on what you guys are planning to do here in 2025, as well as some of the things you want to accomplish this year. And of course, we're already 3 months in here. Just as another thing, just talking the local area there, Sam, is there maybe a couple existing in production projects on Vancouver Island that you can mention just to kind of familiarize our audience with existing production on the island? Maybe there's an open pit conventional that's comparable there of some size and form.
As I mentioned, the Orca Quarry, which is in and around 9 million tons per annum, is the largest that is currently in production. There are some other smaller projects, that were in production, including Meyer Falls, which was a zinc project underground, VMS, the project just about 300 kilometers south of us, which obviously ceased in the last year or two, I believe. And then, of course, the Island Copper Mine, which is where hundreds of millions of dollars had been spent on infrastructure by the government. Like, I do have to say that, people's perception of the island is one that is normal, which is, this is a very beautiful part of Canada. And usually people associate it with Victoria and the what we call south of the Malahat, which is in and around where Victoria is. So just to give a little bit of a geography lesson, we're about 500 kilometers away from Victoria. So the island is massive. And to give people a little bit of a distance check, that's a longer distance from Vancouver to Highland Valley, which is the largest copper porphyry project in BC that's produced by Teck. They're looking to increase 120,000 tons per day to probably double that in the next little while. And then, of course, Toronto's to Sudbury, which Sudbury is clearly one of the largest VMS deposits in Canada, nickel and copper deposits in Canada. So the island is a very separated geography, and it's pretty much separated by Campbell River, which north of that Campbell River was built for the Island Copper Mine. And so what happens now is that, in the last 30 years, I have never seen such political support and alignment for natural resource projects across the board, the opposition, incumbents, First Nation groups, and the focus is threefold, right? And so BC just announced the expedited advancement of 18 natural resource and energy projects, 8 of which are actual mining projects. And the common thread there is do you have good relationships with your First Nation partners? And from our perspective, we have consent agreements with 2 of our First Nation partners that allow us to go through our permitting process on an expedited basis. So we receive our permits in a fraction of the amount of time that most people receive their permits in British Columbia to date. So 14 weeks versus 18 to 24 months. That's how quickly we receive our permits. The second important factor is the infrastructure that I had mentioned. Like, what does a government have to spend in order to build out roads, power, ports? Well, we already have the largest, I believe the largest wind farm in British Columbia just to the north of our property, already producing about 100 megawatts of power. It's the Cape Scott Wind Farm, which means that the infrastructure for this power distribution, substations, grid, it's there. It does need to be upgraded for our project, but it's all already built. The roads are there. The port is the third initiative that the government is focused on, which is broadening out our global partners. As I said, we are right on Tidewater here. This is the closest deep sea water port from Canada to Japan, which is where BHP sold its copper and moly concentrates, similar products that we're going to produce. Right. So in my mind, this concentrate is probably going to go to Asia because it is very high premium, low deleterious elements concentrate that has a significant amount of gold, about 20 grams per ton of gold in the concentrate. So this is a very high premium concentrate that sits on Tidewater. So that is completely aligned with the objective of not only the BC government, but the Canadian government of effectively taking advantage of current infrastructure. No pipelines need to be built here, no sort of additional major infrastructure builds, rail or anything like that needs to be built here. It's only about 20 kilometers away along existing roads to that port. So politically speaking, there has never been a better time in Canada, in BC, which is evidenced by the expedited projects. And we're right in those crosshairs to be effectively identified as the next project to be expedited because of the virtues that I just identified.
It's good to have you cover that off and give our audience a bit of orientation. And with that, I think it's important also to cover what you see as a realistic outlook on time frame to permit the project, because we've seen BC can be, as you highlighted, we've seen instances in the past where it's been a fairly fast jurisdiction. Often it's not as fast, depending on the project and where it is, and then of course the community challenges. But with the advancement, you guys are going to continue to work towards final feasibility in the coming years. You've got environmental data collection and pre-permitting work. When do you think this project would realistically maybe get to construction phase and into production?
So let me just address that top down. And Andrew, I know we spoke about this offline beforehand, given where you're based in Panama, and it's great to see that things are starting to open up a little bit in terms of the shipment of concentrate out of Cobre, Panama now, because that is a huge impact, not only in country, but globally speaking. We need this product and, critical. You can't get more critical than copper. So I think I started this conversation by saying, what are some of the macro shifts, differing from 2000 to now? And one of the biggest, if not the biggest shift, is this level of importance around social license. And so just a bit of a history lesson. The reason why BHP left our area in 1995 was because they wanted to go and develop Escondida and other projects, Spence, other projects that were in South America, because the sanctioning was much quicker than it was in British Columbia and in Canada. Canada it's very regimented, it's very prescribed, and to your point, it can be very long. And so that had generated obviously a complete cannibalization of mining activity migrating from north to south. So from North America, US, Canada to South America, because you could sanction these projects much quicker. So fast forward to today, the result of that expedited sanctioning really did play a disruptive role in social license. And we are seeing a lot of these projects, tens of billions of dollars spent, now being paused or being disrupted because the social license isn't there. And I'd argue that in Canada and the US and Australia, regions that these major companies are coming back to, I wouldn't say flocking back to, but they're certainly diversifying back to these regions because the rule of law, because the structure to sanction these projects, while they take a little longer, you do have assurance that after spending these tens of billions of dollars on these projects, you will have the assurance that they will actually produce for the life of the project as you have budgeted for. So that's the strength of being in a very safe jurisdiction like Canada. So now fast forward to what we are looking at in front of us. So in BC, it's a very prescribed timeline, which is 2 years of environmental baseline, so monitoring, aquaculture, wildlife, etc., and then 2 years of essentially environmental assessment, getting your mines permit, which effectively acts as that 4 years acts as your critical path item, right? Because within those 4 years, you can typically get all of your study work done and sequence it in a way where that 4 year period, best case scenario is your sanctioning period. Of course, there's risk of flex, and that risk of flex is mostly driven by your social license, right? So, do you have the consent of your First Nations and your community partners for the project? And the reality is, if they don't know anything about your project and they get the referrals back to them to assess your project, it's going to take another few years for them to understand your project. So our approach has always been, let's get those dialogues happening early, which is why we have these consent agreements in place. Nothing goes to the province before First Nation communities see it and approve it, which is a bit of a novel approach in Canada and BC, but it's been a very effective approach for us. And the second component is this political will that I've just talked about. There's an absolute appetite and rhetoric and a plan that is being formed to contract that period of time. And so whether that means that they'll allow us to go through the EA process before we complete the baseline studies, but by the way, we have started the baseline studies, portion of the baseline studies already. Whether they would allow us to overlap that's probably the leading idea here of trying to contract timeline, right? And to me, that's a very reasonable way to contract from, say, 4 years to 3 years, because it's not substituting or cannibalizing anything that's important. It's just making the process more efficient, right? So we're not being less diligent or less focused on environmental impact. We're just being more efficient around the sequencing of the process. So that if that happens, then there is a conceivable future where, to get to an FID, final investment decision, it could take three years. But, I think it would be aspirational to say 3 to 4 years is effectively or 4 years is effectively the time frame to get to a final investment decision. And then you add on 2 years of construction, which would get you into production.
Sam, perfect. No, I appreciate that. And also you guys thinking well ahead here in the sequencing to take advantage of that. And of course, the pre-permitting data collection and all the environmental baseline stuff you guys can do and get moving on that. And then also just, again, the history in that immediate vicinity of mining operations is a very good plus to have on your guys' side of the fence here as well. On local community, you've covered this just a little bit, Sam, and how important that is. Maybe just a few specifics here. I want to give you an opportunity to talk a little bit about that as far as what the company is doing to align the local community. And of course, do you see the community fully accepting the project to be developed in the future? What are your thoughts on that?
I guess the best way to answer that is, when I started, before I signed, the first thing I did was I met with the mayor, the council for Port Hardy, which was, by the way, the hub for the BHP Island copper mine. It was effectively built for the BHP Island copper mine. At the time, there were three councillors that had worked for that mine, and the mayor had also worked for that mine as well. I met with a chief of one of the First Nation groups, in our view, one of the more pivotal First Nation groups that had that agreement with BHP and still has ongoing agreements and relationships and involvement with that mine with BHP. Every discussion had indicated to me that they were waving me in, right? So I'm not a geologist, I'm an engineer, I'm practical. I don't fall in love with rocks. I fall in love with opportunity. In my view, the opportunity is driven by the desire for a project to go ahead. Like the economics and the rocks and the geology, that will all be pretty transparent and easy to understand. Like you have to do the work to understand it, but lots of work has been done over the last 60 years to give anybody confidence that there is highly mineralized economic commodities in this rock. So that's not my concern of focus. My concern of focus is, what is the desire for a project like this to contribute to the economic health and benefit of that region? And without over exaggerating it, that is our biggest asset right now in the project. Like, despite having the 4.9 billion dollar NPV, that is our biggest asset right now. There is not in the last 15 years that this project has been part of a standalone company in NorthIsle, there has not been any resistance to bringing this project forward. And I don't think you could really understand that unless you go on site. And so we had a group of investors and analysts on site last year, including Michael Gentili and a bunch of institutional analysts. And we had the mayor come in, and we had some of the First Nation groups come in and talk about the project. And as I said before, there is nothing but will there. Our job, and my job specifically, is to convert that will into consent. And that consent is, well, you have to have will. You have to have desire initially in order to go through the work and spend, the hundreds of millions of dollars to actually get this thing into an FID. Without that will, you're wasting your time. You're pushing on a rope, and I'd rather spend my very valuable time elsewhere. I would never spend my time in an area that I was pushing on a rope. It's too valuable. I could do a lot more other things with my time than that. So hopefully people could understand that not only is that the opportunity as I see it, and I've been to over 40 countries in the world doing diligence on projects, other people's projects during my CIBC career. I can tell you that this is the strongest asset that we have is we've got the desire, and it's up to us to convert that into consent, which is, we have to faithfully do what's right. And that is going through all the processes and going through all the consultation activities and community activities, which we have committed to do.
Sam, that's well said. I think that covers it well. And I think how you're approaching that and your commitment there and well spoken. So I appreciate that. Good stuff on the community work there. And of course, that'll be ongoing as you guys advance forward here. Just another question that came up. You guys continue to grow here, and we'll wrap it up here in just a moment. But you guys continue to grow. As the project advances towards potential development, Sam, talk about the preferred exit. I mean, we know in the junior sector, there's a couple exit routes, pathways that you could be took, but what would you see as really the exit strategy, the preferred outcome that you would like to see? Would you like the company to be bought out in an M&A deal, pre-commissioning, pre-production, or is there a desire to take the project into construction and operation? What are your thoughts there, and when do you think would be an ideal time for that potential exit to actually occur?
Right. So I don't think of things as exits. I think if we do an incredible job, the outcome is obvious, right? If you look at our mission, vision, and value statements, which is on our website, it is very explicit in the actions of the company is driven by this objective of advancing the district as quickly as possible. And if that means we are the best people to do that at any given stage, we will do that. If it means that other people are the best people to do it at any given stage, we will entertain that. And so the way we are approaching that right now, because we've just released a study that is eye-popping to anybody that is sophisticated and in the industry, we are going to use the next few months to see if we can identify initially a potential partner such that at FID, final investment decision, we have already established a very strong consortium of partnerships. As I said, this product is extremely attractive from not only a concentrate perspective, but also from a commodity perspective. Copper, gold, these are, essentially 90% of the publicly listed companies in Toronto are focused on copper and gold, right? So this is a real opportunity for us to sort of go down this journey of discovery of identifying a potential partner. And I've been doing this for many, many years. I understand that the stage that we're in right now is equity risk stage, right? And so this to me is effectively our next step. It's how do we position ourselves such that at FID, we've already identified a very strong consortium of partners that can help us advance this project as quickly as possible. I actually think that we are currently the best position to advance this project into FID because not only do we have the ability to de-risk this thing, but we have the ability to make it much, much, much more attractive through additional discoveries in this northern corridor, right? Which is something that tends to get lost when you work for a bigger company. Bigger companies tend to look at opportunities in a very myopic way. And so they say, oh, for development, we're going to be developing this thing without even thinking about what are the other opportunities to enhance the project, right? So I actually personally believe that we are the best people today to advance a project, and that is identified by the success of our chairman, Dale Corman. So he essentially took Penasquito from effectively the stage that we were at a few years ago, all the way to feasibility study, and then ended up selling it for $1.2 billion to Glamis Gold Corp, which is now one of Newmont's, probably more important mines. So if you were to look at historical precedents and just, assume where do you add the most value? Well, right now we are adding the most value to the project. And I don't think a major or any company could add more value faster than what we're doing around consent-based agreements, around permitting, around stakeholder engagement, around making the project better and better and better through every single exploration program that we do, right? Will there be a time where there's another entity that actually would add more value than us? Well, I can guarantee you, if that time comes, we will be faithful to our shareholders and stakeholders and stick to our mission, vision, values, which is we are going to find the right partner to advance this project as quickly as possible. That I can guarantee you. We do not look at this as a legacy for me. This is not a personal ego trip for me. I don't have to see this project up to any certain level or stage or development or exit or anything like that. I have no predetermined result in my mind, which I believe, just from a life perspective, that is the best way to advance opportunities, is to not have a predetermined outcome. Otherwise, 9 times out of 10, you will be disappointed, frustrated, and you'll probably make the wrong decisions.
Sam, I appreciate the views on how you're looking at that. Worthy again of note taking, and obviously the results will drive that success going forward here. Another area there, just as we wrap up here, you guys are presently on the TSXV with your market cap and where you guys intend to go here. Any immediate plans, or maybe in the next couple of years, plans to go on the TSX big board, maybe to look at a US listing? Any comments on that front as far as exposure?
Yeah, absolutely. Right. So, like, I mean, as I said, I advised Dale Gorman on their NYSE listing at Western Copper in 2010. And so I absolutely see the merit as you grow into relevancy and into a bigger market. There is merit in doing that, 100% merit in doing that. And so, yes, the answer is yes. There is a plan to do that. I think that it opens up a tremendous market that currently, is quite limited to us. But as you know, that there are real costs associated with that listing, and we want to make sure that we're continuing the hyper growth that we have, but also being quite prudent on the costs that are associated. We need to see the cost benefits for doing that, and of course, being $100 million market cap company, there is very little cost benefit of going on the American Stock Exchange. I think that the next step would clearly be a TSX listing to give us access to some of the indexes that would obviously generate a tremendous amount of liquidity for us. We're already considered for a number of the smaller indexes. There should be some liquidity, positive liquidity events coming up as it relates to that being over $100 million market cap company. But I do think that as we continue to grow, we will absolutely access broader markets. I think a good perspective here. When I was a investment banker, institutions were the price setters for junior, intermediate, large cap companies. Like firms like ours at CIBC had liability desks. We would have trading that would effectively enable companies to access a tremendous amount of capital through good liquidity, and firms would take liability on those positions. That doesn't exist in the junior market anymore, right? So that may exist in some of the multi-billion-dollar market cap companies now, but it does not. That trading does not exist in the junior market today. So what our focus right now, for sure, is to build up certainly our institutional shareholder base, which we have been doing very thoughtfully, methodically, with extremely sticky and supportive partners. who are very happy with their performance. But it's also to really try to access the market that's been a bit elusive to the junior sector for the last, call it 5 to 10 years, as we see this absence of liquidity in the institutional market. And so I think we're finding that strategy we're taking to try to access that market is increasing our liquidity. It's increasing our ability to access new capital. And with that, we'll follow the money, right? If the money is suggesting that we should be uplisting to New York, then we will do that. If it's suggesting the same for Toronto, we'll do that. If it's suggesting the same in Australia, which is interesting because, as I said before, half of my business at CIBC was the ASX TSX listing business, where we would draw Australian companies to list in Toronto. But now that's going reverse, right? Because there are pension funds, superannuation funds in Australia that are forced to actually invest in mining projects, which is kind of flocking a lot of the mining projects, including BHP and Rio Tinto, who are now using Australia as their primary and only listing, delisting from the London Stock Exchange. It's just phenomenal to see. It's just an incredible movement to see how much capital or how many issuers are now going to the Australian Stock Exchange. These are all things that are, quite frankly, right up my alley. I do understand the cost benefits of doing these things, and we were going to certainly pursue them as needed and required.
Thank you for the views and also the insights on that. Certainly, TSX would make some sense. But yeah, the burden and the time and capital and resources, and of course the ongoing maintenance of a U.S. listing, maybe a little bit down the road when the company grows a little bit more here. And then also appreciate the comments on ASX attractiveness and some of the things that are happening there with some of these dynamics and dual listings and some of these other things. I wanted to leave it here for now, short of any other comments you wanted to add there. But I wanted to leave you with this, Sam, for potential investors who are listening in. The company has a market capitalization of about 175 million Canadian dollars. Why should NorthIsle Copper and Gold be considered within the institutional, family office, and retail investors portfolio at this stage?
Quite simply put, it is a unique opportunity. I don't see very many assets, if any assets, that are currently not owned by a major with the characteristics that I'm seeing today, which is extremely robust economics, extremely attractive capital intensity. So that speaks to the developability of a project. Infrastructure that is second to none, hundreds of millions of dollars has been spent already on brownfields infrastructure, roads, ports, town, power for a project like this. A political environment which is now superseding any negative perception of permitting in Canada. I really do think the momentum is something that I've never seen in Canada for the 30 years that I've been in this industry. So all roads are aligned here to success for our company and for our project. And welcome any of your listeners to partner up with us, join our journey. If you want to learn more about our company, visit us at northisle.ca. That's northisle.ca. You can contact us through info@northisle.ca, and we'll get back to you as quickly as we can. But we are very much looking for continued partnerships with strong shareholders to join us for this journey.
Sam, thank you for giving us an introduction of the company. Best of luck in the coming months. And of course, with the exploration work and expansion, we look forward to having you back to update maybe later this year. Thank you.
Thank you very much, Andrew. We'll talk to you soon.